Welcome to The Nation. I'm GERARD. RATNAM. Joining us today is Professor Dr. MURALLITHARAN MUNISAMY, a public health physician and the Managing Director of the National Cancer Society of Malaysia. They do a lot of good work. We'll get into that shortly. Now, with medical insurance claims increasingly under scrutiny and more Malaysians facing unexpected rejections, we explore how the system is managing risk, why medical costs and claims are rising, and what these changes mean for everyday Malaysians. Doc, thank you so much for joining us again. It's been a year since I sat on an interview with you, and it's good to have you back year-end. Let's do a year-ender and a sort of try to find out what's wrong with the whole insurance industry. How have you been?
Absolutely a pleasure as always to be with you. Absolutely, we've been missing you, man, on the...
Likewise. And on that note, your article, or you've written an article, or you're writing a series of articles, and it begins with a very blunt premise, or at least the one I read. Medical insurance in Malaysia operates as a private profit-driven market rather than a social protection system. Now, the question is, why is acknowledging this distinction essential before any serious discussion about what I like to talk about, affordability, coverage, or fairness? No. Before we even can talk about that, why does this need to take place first?
Okay, so essentially we have to understand that there's a kind of big diversity across how we pay for healthcare in different countries. So for example, and the problem is we follow a British model, and in the British model, the state generally pays for healthcare. It's more or less a given right that you pay tax, and the tax finances the government, and one of the services that the government needs to provide is healthcare. It's almost like a human right. I argue it is a human right, different discussion. But that's how it works in most kind of British-derived systems, or we call them beverage systems. Now, on the other hand...
They're called beverage systems.
Beverage systems, after the guy, Beveridge, who actually created this kind of mechanism for financing healthcare. So tax-driven. Now, in other countries, for example in the United States, they never really had this kind of model. So it was always right, you had to get healthcare as a private citizen. And as a private citizen, the only way for you to actually pay for healthcare is buy insurance. And by buying insurance, then the insurance company kind of looked at financing you when you had illness. So basically you're paying for that risk of getting illness and being protected against that risk. So when you get ill, the insurance company kind of pays. Now, what has happened in Malaysia? Over the years, we've had huge changes demographically. We've talked about it many times. People are getting older. The system is basically just being overburdened. And
public health system.
Public health system.
Yeah.
And the public health system, it's being overburdened, and you know, there's difficulty in providing services, as well as at the same time, there's been this rise of private healthcare systems since the 90s. You get private hospitals, they're offering kind of easier access to care, but you have to pay for them. And as they began to be set up, private insurance, the sector, began to grow in Malaysia as well, because people saw the opportunity that, you know, not everybody wants to wait for public healthcare. You will get it. Mm-hmm. It is almost free, but you know, there's a lot of kind of waiting issues around it. You may not get all the care that you need. There's quality issues, so on and so forth. And so they decided, okay, if I can pay for my healthcare, why don't I do it? So initially, the first kind of private hospitals, Pantai and all that, when they started coming up, people were paying out of pocket. And that's when you saw the opportunity for insurance. Insurance began to come into the picture. They said, hey, why don't you buy insurance? And insurance can protect you against the risk of getting sick. And you know, when you do get sick, look, we'll kind of pay out. So a lot more people have become insured or have taken medical insurance, and now that's actually fueling this entire system of private hospitals and private healthcare as a whole.
Right. So there are premium hikes, policy exclusions, and disputes over claims. These have become recurring flashpoints in recent years, especially here in Malaysia, and most of us talk about it. Most of us, everyday people, we talk about these problems. Are we being ripped off? Are we being fleeced? But apparently there's two sides to the story. Now, what does this pattern tell us about the underlying health of the insurance system itself here in Malaysia?
So one of the reasons why a lot of us have started exploring this very extensively now is we are very worried about the health of the insurance system. interestingly.
Right.
Because medical insurance is, at the end of the day, an option, right? Insurance companies can choose to provide medical insurance, or they can choose not to provide medical insurance. In some cases, and you have seen this, some
with the
insurance
latter being more
companies,
prevalent these days.
they are kind of essentially saying that they're making a loss at providing medical insurance. So there's always been this jitters in the market of whether medical insurance providers, because they provide a lot of other insurance as well, they'll declare that medical insurance is too unprofitable, I don't want to do medical insurance, I'll exit the market. But if that happens, you're going to have this essentially collapse of the public healthcare system as well, which people have moved to the private sector because they can't get the help they need, or they need to get in the public sector. So if you stop, or insurance is shutting down as a sector, medical insurance, all these people are going to have to either pay out of pocket in private healthcare services or come back to the public sector. Either way, no good outcome. So the kind of question is, what are we doing wrong? What can we help to kind of fix it?
Now, a central argument in your article is that the insurance risk pool has fundamentally deteriorated. You might want to explain that to us. Now, what does rising risk within the risk pool actually mean, and how does it translate into higher premiums for ordinary policyholders?
So this is a very very interesting question, which I think insurance may have gotten stuck with. Traditionally, okay, the way you buy insurance is, I want to, I feel that I'm at risk of getting a heart attack, for example. And if I get a heart attack, I have to pay for admission, stenting, surgery, whatever it is. It's going to be about, say, 50,000 ringgit. I'm making these numbers as just a broad example, yeah? Okay, 50,000 ringgit, just in case people decide to benchmark after tomorrow that, that heart conditions now are going to cost 50,000. So 50,000 ringgit. Now, but I am maybe a salary earner who makes about 5,000. I'm never going to be able to pay 50,000 one shot. So I'll buy medical insurance. A premium for medical insurance probably about 1,000 ringgit a year. And with that, if I get an accident, a medical accident, so as to speak, a medical catastrophe where I need 50,000, the insurance pays out for me. This is essentially how insurance works. But insurers are private agents. This is not a government-run business, and I need to make that point, because one of the things that we've been advocating is the government needs to probably start providing insurance, social health insurance, or some other mechanism. But we'll come to that in a bit. Now, the insurer is a private agent. As a private agent, I need to make a profit. So when I want to make a profit, I want to make sure I'm able to control the risks. I don't want to take a person who's going to get a heart attack tomorrow and sell him insurance. I'm going to basically lose out. So what they do is they control the risk pool. How do they control the risk pool is, I try to filter and take low-risk people into the pool. Now, you're asking me, why do you think this pool is, why this pool is at risk, or now why is the risk within this pool getting higher? Very simple. The insurance industry seems to have miscalculated, despite them doing a lot of kind of testing, or a kind of...
So wait, hang on, this miscalculation is years in the making, or...?
Absolutely, it's years in the making.
Right.
Because we are basically now suffering perhaps the kind of big miscalculations that have been happening for years. So they thought they were only keeping low-risk people. But unfortunately, two things that we're noticing. One, when they took these people, they were low risk. But now, 10 or 15 years later, the risk of these individuals have increased so much more than the actual risk. The actual risk has increased compared to what they calculated. Basically, people are getting sicker much faster. Okay.
So based on their calculations, this has skyrocketed now.
Absolutely. What's also been interesting is people that they thought did not have any disease, and they let them into the pool, they're now figuring out that they have diabetes, they have hypertension, they have a whole host of other conditions that are driving, again, the kind of insurance risk. So now at such high risk, they are costing a lot more. They're causing a lot more expenditure. And that's why insurance is...
Okay, so let me digress a little. Saying someone in their 30s or 40s, he or she has a heart problem of some sort, and they're then taken to the OT or to the procedural room, and the procedure is done on them, stents are put in. What happens after that? Are they insured for the heart still?
So,
from your knowledge?
So really it depends on which kind of policy you have. So the answer is maybe yes or no. So in some insurance policies, especially older insurance policies, that's probably the end of the payout in the type of policy that they have. So in newer policies, then yes, it gets reset and then you can go on to get treatment for that condition. But it all depends, ironically, on whether you actually had some inkling or whether you had a heart condition when you were actually buying the insurance in the first place. Because if not, and you like so-called falsely declared that you never had a problem, then you actually get excluded. Nothing gets paid for.
Right. So insurers already rely heavily on underwriting, exclusions, waiting periods, and also, to some extent, premium loadings. Now, why are insurers still facing claims that exceed expectations despite all the safeguards that have been put in place? So then we've got safeguards in place.
Yeah. So I argue that the safeguards have not been safe enough. They're proving.
There's hospitals.
Yeah, that's proving to be true because despite you excluding people, loading people, you're still letting people at risk. And I'm making the case for this very strongly because two things. One, a lot of people actually don't realize that they have disease already. So even when they make their declaration and start buying insurance, they actually don't know they have disease. And that's sometimes really due to like when a thin person actually gets a heart attack, you find out there is a skyrocketing level of cholesterol. This is because insurance is relying on the perhaps goodwill of people to make a declaration. It's easy for them at the back end to then say that, oh, this guy, he probably had high cholesterol 20 years ago, and now I'm going to act to kind of exclude him. But to be fair to this guy, he never knew that. So one of the things is we need to put a stronger safeguard, which is screening. You need to screen a person before you put them into an insurance.
Right.
And by making this mandatory, I think we'll start picking up a lot of people earlier as well.
So it's interesting that you mentioned screening, because screening is the bulk of everything in a hospital now. Doctors, the work of doctors, and I'm going to generalize when I say this because I see this every day in private hospitals, right? The work of doctors are so siloed, like we did talk about before we went on air, that everything is a screen or everything is a test, and that costs money. So do insurance companies see this, okay, this is also where the problem is?
For sure, sir, and I'll tell you a very interesting story. So screening and diagnosis in this country is almost never covered by insurance. Very few new policies allow that for it to be covered, but otherwise it's not covered. Okay, when this happens, essentially the patient is paying out of pocket. Okay, and so those bills that you see sometimes, and this is the thing where you see sometimes you're worried whether this is economic incentivization in the wrong direction. What do I mean by this? Screening and diagnosis. So essentially screening says, the idea of screening is I don't have any symptoms. I'm now checking whether I have a disease in the early stages. Okay? Diagnosis means I have symptoms and I'm going to do a couple of tests to find out whether I have the disease or not, whether these symptoms are correlated with a severe disease. For example, I start coughing and then I say, maybe I have TB. Should I get a screening test done? I go and get an x-ray and everything. If the x-ray is normal, I don't have anything. I'm screening, it's good behavior, but insurance doesn't pay for it. Now, if I did an x-ray, I find nothing wrong, then I do a CT, I find nothing wrong, and then I do another test, I do a biopsy.
It's a smorgasbord of tests, okay? So there'll be, so just talking about the lungs alone, you'll have to do a sputum, you'll have to do a CT, and it goes on, yeah?
Absolutely, and this is the interesting part.
Yeah.
If something is found to be positive, it becomes a disease, insurance will pay for it. So sometimes the query I'm having is in my head, and a lot of people have this similar query is it economic incentivization in the wrong direction? When you don't pay for screening and diagnosis, are people trying to find a diagnosis so that then an insurance claim can be made out of this?
Right.
So that is an important question to have.
Right. I wrote this question down and it sounds quite intelligent, so I'm going to read it verbatim. Your article highlights the rapid rise of non-communicable diseases such as diabetes, heart disease, and cancer appearing early in life. How has this epidemiological shift altered the financial assumptions behind medical insurance? We've talked about it. Just open this up a little further.
Absolutely. So we assume when you're buying insurance that people are low risk, okay? They're not going to claim into the risk pool, and there's enough low risk in people in the pool for us to be able to overcome the people who actually do make a claim. Essentially, that's essentially how insurance works. And the less people make a claim compared to people who have paid premiums, that's how insurance makes money. I mean, that's how they turn profitable. And look, how to say, it's a business. It's exactly a business like you're selling nasi kandar. You need to sell a lot more nasi kandar rather than keeping your fish curry in the fridge and storing it and throwing it out at the end of the day. That's how businesses make profit. Nothing wrong with that. Now, the miscalculation, as we've come to mention over this kind of conversation, is the fact that when people are high risk coming into the pool, there's just a lot more claims. So there's two ways to look at this, and this is how we need to try to shift the thought process. One, either you let high risk people only, you start increasing the safeguards to let high risk people come in, so you try to lower your risk, okay? And one of the better safeguards is, as I was telling, start having screening mechanisms. So people need to go for annual tests, a certain number of tests that will determine, for example, cardiovascular disease, lung disease, cancer or something, and then when they're okay, you let them into the system,
right?
Okay, or you let everyone into the system, and this is the problem. If I
no, but okay, so you're saying we can let everyone into the system. Now, from what you're saying, what I've gathered is that there are too many sick people in the system, and the pool of healthy people are small to keep insurance alive and keep their heads above water, or at least that's what we think.
Absolutely.
Yeah, okay. But
I mean, we are going on the premise, especially exactly that people are out to run an honest business, and it's an honest problem.
Right. Okay, we're going on running on that premise, but I tend to fantasize a little bit more. Having said that, just to push this a little bit, forward a little bit, can't we bring it down to, you start an insurance at a younger age, very cheap, and it builds up.
You've hit this right on the nail, sir. Please go ahead. Sorry.
Yeah. So every child who gets to standard 1 needs to have some sort of insurance, whether it's a ringgit, 50 cents, something we used to pay back in the day. In the 70s and 80s, they had MCIS insurance and all that back in the early days. I don't know what happened to systems of that nature, but you start accumulating from there, and then you have a larger pool.
Sir, you have solved this problem. We're ending this program right now. Yeah, goodbye. So no, essentially, this is exactly what it is. So you need to widen the pool, because this is the essential problem. I'm a healthy 15-year-old.
Yeah.
Who the hell cares about insurance, man? I'm going to live forever.
Yeah.
All of us were young and stupid. Now we're just
then
stupid.
I'm 45.
Exactly. And then you get up when you're 45. At 45, you're concerned about insurance. But at that time, you go into the pool, there's definitely something wrong with you. There's some cholesterol, there's some pre-diabetes. It's all your bad karma catching up with you in terms of your health. So it's absolutely right that we should go lower down the scale. We should let a lot more people into the pool when they're much younger. For example, and just to give you a direct kind of comparison, I just had a new set of kids, and
he's making this public on national TV.
Exactly.
Congratulations, Doc.
Dasar kependudukan negara. Anyway, and so
you have a healthy pair of twins.
Twins, and what's interesting is this: when I want to pick up insurance for them, it's only about less than 100 ringgit. Interesting, for them to get the same amount of health insurance that, in terms of coverage, that I have, and the premium is the same until they turn 100 years old. So if, exactly what you were saying, sir, which is if you let them in at birth, and if this was mandated, you'd have such a big pool, which would mean that we'd have washed away this high risk.
So a couple of things we need to, when we talk about reform proposals and practical mechanisms, this would be one of them. You're talking about screening too, and you mentioned this a lot in the article. Please talk about that. And if we can push this a little further, maybe talk about NCSM's latest, initiative with regards to screening.
Absolutely. So that's just 20 questions.
We're giving you some space to sell here.
Yeah. So I think the first is the fact that if you looked at widening the pool, okay, this would allow people to essentially coming at a young and healthy age. But I just want to make this point as well, that there's always going to be a set of low-income people who the government has to subsidize or pay for them to come into the larger insurance pool. Because essentially we have a B40 population. So it's either you give them some access into the pool, or you subsidize them, some mechanism to bring them into the pool as well. Okay? Now then only you get a wide enough pool. Essentially, a healthy insurance is an insurance that has 32 million people in it.
Right.
Currently, don't forget, we only have 22%, 23% or something of Malaysians into a health insurance pool. Right. Next kind of statement. How do we actually run, how does screening make sense? Because a lot of people will ask me back, hey, by screening and then I find something wrong, then you're not going to let me into the insurance pool, So, but this is where it's actually kind of, the argument is very interestingly formatted in a different mechanism. When you do screening before you let people into insurance, the idea is you can actually, because insurance seems to only work one way now. They call it loading, right? If I have high risk, I load you. But if I have low risk, why should I not incentivize you? And again, if it is an equity kind of argument, and if these are people who are then able to kind of have low risk, and we're going to incentivize them to come into the system, you can actually work in reverse as well. And that is an important point to make, so that we can get a equitable access of the population into the entire risk pool. And when you screen, you pick up things so much earlier that for medical insurance, even if they did pay out, it's a lot cheaper than picking everyone up at stage 4, which is what we're doing now. And that segues nicely into my story about lung cancer. As a disease, lung cancer is one of the most horrific things we're facing.
I lost a friend to lung cancer.
Yeah, absolutely. And I'll tell you why. 95% of all cases are being picked up in stage 3 or 4. You know why? One of the major factors, screening is expensive. And as I was saying, the way things are positioned in this country, you screen, you don't find anything, you have to pay out of pocket. So why would I want to screen? I have to pay. Screening and diagnosis for lung cancer costs about 10,000 ringgit in this country at the lower end. Or at the higher end, reaches up to 15,000, 18,000. Now, how do we pay for this? So one, we did a whole kind of modeling, and instead of just talking about it, we put in a solution. So something called Lung Shield. You can get it at lungshield.cancer.org.my. What does it do? What does it do? One, we brought down the technology. Instead of doing CTs, we went to X-rays. We are now moving it across GPs all over Malaysia, so it's available at a GP near you. At something less than 200 ringgit a year, so it's only about 179 ringgit a year, you get a screen for lung cancer and every other known lung disease as well.
But this will go back. So when it goes back to the right, this is how it'll sound. Okay, it looks like he's pushing a screening for a lung test. I don't have a history of lung problems in my family. Why should I do it? And then 10 years down the road, we'll find out that 25 million of us have lung problems. And I think this is a vicious cycle that goes on from one generation to the next. How do we break this cycle now?
For sure. And that's why, okay, so I'll just finish up on that. Because what's different is, besides the screening, if something else is found to be wrong, every other subsequent test is covered by the microinsurance. So it doesn't disincentivize you to screen, because when you screen and you find something wrong, you don't have to pay for anything else.
Right.
That's one. Second is, so we're hoping that even that as a kind of open door incentive, it'll start getting people to, okay, I have the financial security to go ahead and do a test, because everything else is being covered for me. I have no additional financial risk. One. Second is, you're absolutely right, and that's one of the things that need to change in this country. We've gone over it again and again. The idea that you need to screen, and when you screen, you pick up things early. And this is where, again, tying this to kind of insurance inclusion, in countries like Korea, for example, if you don't do a medical screen every year, which is mandated, and the insurance company pays for it, when you do it, they renew your insurance. If you don't, bye-bye, no insurance.
Right. Just to circle this whole interview about insurance, there's a lot to digest here. Now, before year end, what should we know about getting insurance in 2026.
So, ironically, and the first fix that I could tell your viewers is, rather than relying on medical insurance, just on medical insurance, in order to get a health payout, really start looking at critical insurance. Because critical insurance gives you a lump sum payout, and at a lump sum payout, you're then able to kind of navigate your own treatment within private sector, within public sector, taking and choosing what are the kind of big pockets that you need, because medical insurance is coming up against a lot of barriers. That's one. Second, please, for God's sakes, rather than buying an iPhone, no, not an iPhone, expensive cellular device, so that you don't sue me. But yeah, put your kids into getting an insurance, even at the youngest age.
So instead of piano lessons, of course, piano is good. Instead of working the left and the right brain, just make sure there's something to cover the brain.
Yeah, exactly. Somebody should pay for the brain injury.
Right. Yeah. Rising medical claims and the increasing prevalence of chronic diseases are reshaping the landscape of healthcare. Understanding how risk is managed and what it means for policyholders is essential for making informed decisions about your coverage. Don't forget to join, of course, Dr. Murali with the next article of yours, which comes out when?
Essentially, I have to talk to my editor, but look at it.
It'll be out at some point, and we'll try to break that down for you. That's all the time we have on The Nation. I'm Gerard Ratnam. Follow us for more in-depth conversations on issues that matter.